What's up? How's everybody doing? Hopefully everybody's having a fantastic day. It's been a real slow, sideways, choppy day. It's going to change here in about 15 minutes. We've got the Fed, the FOMC. Powell is going to speak. Meeting. We've got it all. Bitcoin is currently spiking before the meeting, which is funny. You're under the yearly opening range on Bitcoin. You're currently above the daily 21 exponential moving average. You are testing that right now. You have been all day, really. As long as this area holds as support, this is where I would expect Bitcoin to go up from. And I don't know that it's going to continue to go up. We're supposed to get a 25 basis point rate cut. That's should be bullish for risk markets. Bitcoin is traded as a risk market. As you guys are aware, usually we get a big news event and we get what's expected, and for whatever reason, the market just doesn't want to trade that way. So we'll see what happens today. Main thing I'm looking at here is going to be the TLT. I want to see, do the bond markets stop going down? I think the bond markets going down would be bad news, right? I don't know if risk markets would sell off, but it's definitely not good news that the Fed is in the middle of a rate cutting regime and the bond markets are dropping. Should be the opposite. The bonds should be following the Fed. That typically is what happens, and there is near-term volatility associated with it because these things are tradable assets or investable products. And whenever you have tradable or investable products, then obviously you're going to have near-term volatilities as people make decisions. So yeah, I mean, I think that this breakdown right here is a bear trap, but we'll see what happens. We'll see how the market takes it. Today might not be as important as time later on, like tomorrow and the next day and going into next week. And we may see the market do like sort of a head fake move today and then straighten up next week. We'll see. Should be fun. Obviously, I have a bullish bias on Bitcoin. My strategies tell me that, I got to be looking for longs, even though there is a potential that it could drop here. Based on the current news, the volatility and everything. But if I was looking to trade this, technically speaking, I'd be looking to buy support. And Fartcoin could be taken as neutral. It's bullish on the month. It's slightly bearish on the week. You haven't been able to make fresh weekly lows today. So right now, this is going to be your weekly low. I think as long as you're trading above this weekly low, you could be bullish. If you start to break under this weekly low here and put in a trending move, then clearly you're going to want to sell into resistance on up moves. I think you're a little bit, like I said, I think you could literally take this either way. And then Bonk and Pingu are both more bullish than bearish. Pingu is currently trading above its daily 21 and everything that's important for the potential near-term reversal. Obviously, on the longer term, like your yearly trend is down, right? And last month was a severe down month, so long-term trend, this looks more like a dead cat bounce. It doesn't even look like a dead cat bounce yet. It's very muted. I think we're going to get some resolve today. Hopefully everybody's having a fantastic day. Hopefully everybody's paying attention to their risk capital and not getting smoked. Loon C struggling. Is Luna going up? It was. Luna had a big breakout this morning. I can't believe I got stopped out. I actually got long this thing earlier this morning, got stopped out. Would have been a huge freaking trade. Damn it. You have those days, though. It is what it is. Now it actually looks like it may be potentially topping out here on the very near term. Volume still extremely bullish. The volume delta down here is what I'm talking about. Delta, cumulative volume delta looks really bullish still. But when you have these high flyers, these kind of blow off top sort of scenarios, usually the volume is very bullish when the top shows up. Point of control looks okay for shorts, but it is super volatile. So if you're going to be looking to short this, you got to be very careful. Make sure your risk is mitigated. Yeah, you could have a top now. Earlier, you could see how the 5-second chart was catching support on this average here. Lost it here. This is a fake out and then a drop. So it is trying to bottom or top out. It could be getting ready to roll over. Just be careful. Obviously, be careful with it. It is very bullish. Luna is a shit coin if I've ever heard, seen one. Absolute garbage. To me, it might not be to you. You might love it. It's up 45% right now. 24-hour volumes are huge, and the bid is being supported from the funding rate. So you will pay the longs if you try to short this. The funding rate is every 8 hours, though, so it's not a huge funding rate. It's not enough to support the bid. And then you have Truth USDT that is up 110%. Not really doing anything there. Yeah. Probably, if I'm going to, it'll probably be Luna. We try to short it, but it might be too late. Oh, damn it. It's the third biggest mover on the day, Luna. Oof. Doesn't look like a short. Only on the near term. It's super volatile. We need to catch it on an upswing. We can't really be looking to enter a short on a downswing. Yeah, probably be, well, Fartcoin can't really long it now. We got 8 minutes till the news. We'll get the news. They'll tell us whether or not they're going to cut, and then the press conference will start at 2:30. We also had an RBA interest rate decision this week. I thought we had a BOC interest rate decision, and then the Fed FOMC interest rate decision. I thought there was 4. I'm only seeing 3. Yeah. We'll see what they do. We're expecting a 25 basis point. And then MicroStrategy is currently trading at a premium based on their MNAV. What do I mean? I mean the amount of Bitcoin that MSTR owns or holds is discounted. So like if you buy MSTR right now, you're buying Bitcoin at like 80 cents on the dollar. It's not a huge premium, but it is still a premium nonetheless. But the shorts are hoping that MSTR starts a death spiral. That would not be good. But we'll see what happens, how this ends up playing out. As of right now, MicroStrategy has enough money to pay all of their debts because they give out capital, and then for what they get, they buy Bitcoin, yada yada. But they have to make payments, interest payments. So they've got about 2 years worth of operating capital. So it's not going to be dead anytime soon. I don't think it is going to die. I think somebody will pop it up. I think Michael Saylor will get a couple people, make some deals and do what he's got to do. But we'll see. Obviously, Bitcoin's price needs to continue to roll over in order to keep MSTR down. If Bitcoin starts to skyrocket, then MSTR is no longer in danger. I bought this a couple weeks ago, and I bought it last week. So I want to buy things that are oversold on the weekly. I know that they can stay oversold for a very long period of time. I understand that. But I definitely want to buy things on weekly oversold. All you got to do is look at the MicroStrategy chart long term, pretty much forever. If you've ever been wanting to buy it, these are all very good places to buy. And it has been like that pretty much forever. I have a near-term trade on with options. I need it up to 225. Once it gets up to 225, I can exit that near-term trade, and then I bought shares. Shares I'm holding for the long term. So kind of need Bitcoin to do something for that trade. But VIX is retesting the early opening range today. 1721 is the early opening range on the VIX. You're currently trading at 1722. Here's your VIX top left. This would be resistance. S&P 500 trading in a very, very tight range here. Here's your futures. You've basically been in this range for about 7 days. This was when it took out the November swing high, and then it kind of backed off, but it hasn't backed off hard. It could today, so if you did short that trade when I posted the video, if you took the short when you liquidated November's high on this day and you're still holding that trade, you might want to trail that stop down to at least today's high. I think you would be okay, but at least if you're not and it does get a big gigantic spike to the upside, at least you get out of the trade with a profit. Do not hold the short, because if price is trading above November's high, then I no longer have a bearish bias. Okay? I don't have a bearish bias on it. The whole trade was set up as literally defensive, right? I own this long term for the growth. So I need to protect my long-term capital. I have to put on hedge trades. And that's all this was. I don't see a massive bear market coming Other people do. I just don't. Does that make me wrong? It could make me late. I don't know. Only time will tell. All right, so this would be a maybe opportunity on Bitcoin here. I do not like getting involved right before the news because it's so volatile. Unless it's at a long-term swing high or long-term swing low. If you're trading in the middle of a range like we are here, I do not ever want to get involved in that. Because you can literally take out today's high and today's low in one candle. Then I don't want to be a part of that. There's no like objective place to look for the long. You can look for the long at today's low. If you get a spike down to there. If you have a bearish bias on Bitcoin based on the yearly opening range, then you would be looking for shorts around today's high. We're getting the news now. We're looking for 25 or 375. Sorry, 350. My bad. No, 375. We're at 4. We're looking for a 25 basis point cut. We're looking for 375. I think you got your number, even though this hasn't came up yet. Let me get it on the internet. Let me get it up on here. $375. All right, there it is. So press conference will come up at 2:30, but this is bullish. It should be bullish. Things should be traded bullish. Lee. Dollar is cranking to the downside, which is what we expected would happen. And like I said, you just smoked the day high on futures. So hopefully you did that. All right. You even got the day high there on Bitcoin. That was your high day. All right. Maybe look for an ad here. I already have a small long position on Pingu. I'm going to look to add on it here. Wait, that's not Pingu. That's... I'd rather add on that. 12335 is where I'd rather participate. Either I'd like to get long here or down here. I'm gonna throw it open here right now, see what we can do. And then right here. 1, 2, 2, 3, 4. Looks like it's going to go lower. We'll see. Okay, that's what I want to add on. Got it. All right, my stop's going to be right under a low of day, which is right here. All right, what's going on with y'all? What are y'all into? What's up? What's up? Going on? Yeah, let's get that money. We're gonna try. We're gonna try. No pants. What's up, Trade Talkers? What's up, Oxum? KJY, how you doing? Ed, my man, the G. Can we look at Palantir? Palantir. Yeah, let's look at Palantir. The TLT looking really good. I definitely want it back above October's low. That's this white line right here is October's low. You do have a head and shoulders formation right here on TLT, so if it does break down, there is a measured move to make, and that measured move puts you down here at about 85.50. I think this is going to be a bear trap. So if we can get back above 88.65, I think I'm going to put on longs on the TLT. Palantir coming up. Palantir is a hugely overbought asset class. It's hugely speculative right now. This thing exploded in value. My opinion on the matter was this was a massive short squeeze. You probably had a lot of big hedge firms saying they don't deserve that high of a valuation. We're probably short, and they had to get smoked, get out the way, move bitch type of thing here. And it's just been extremely to the upside for a very long time. I mean, it got so overbought on the weekly time frame. This thing was so hot. It's moving up into a weekly supply zone right now. Weekly supply zone. Obviously, people think Palantir is still a good buy at 155. You could arguably call this a dead cat bounce. This almost looks blow-offy to me. So basically, I would be taking profits if I was long Palantir from down in here. I would definitely be taking profits on this. I think you might be able to if it breaks out above this, I wouldn't be looking to short it, because you might be trying to put in like some kind of bearish weekly divergence. I would let that divergence get printed before I would look for the short. Because generally speaking, a lot of your older technical analysts, like guys that's been doing this since long times ago, they're generally not going to look for shorts until you get that weekly bearish div. I would probably be about thinking the same things. So you could look for shorts here at 188.63 with a very tight stop. But I don't love the short. If risk markets are going to be bullish, this could be bullish with risk markets just based on that. But this is an area of potential resistance here. You can see you're up at 80 on the 4-hour RSI. Let's see, how high did it get? It looks like 82s. And then back there, you got up to 86. Yeah, it looks like you could get as high as it almost got into the 90s. But you are so overbought, you know what I mean? You never want, and the 4-hour, I get it, it's not a high time frame, but it is definitely something that people look, like I won't start shorting those random alts that, how you get altcoins that are just up 100%. Whether they're being manipulated or what, right? Just every day almost there's some alt that's just mooning. Well, I won't even start looking for shorts on them things until they've got a 90 on the 4-hour time frame on the RSI, because it's still too early. Now, like something like Luna today, it didn't have, like, you're nowhere near 90, right? So really and truly, this would be early, way early for me. So I don't love it. I was looking at it earlier this morning. I mean, this is a good looking 30-minute candle for downside continuation. I need a test of it like 23.53 before I can short it. I can't short it in the middle of the range. This was how you moved in the last 30 minutes. So I can either look for a short at 23.55 with a tight stop, or let it liquidate high of day and see if it falls back under the high of day. If that happens, I could take a short. But I can't take a short in the middle of the range because I know for a fact it can trade back to at least 23.60. Well, same thing can be said for Palantir right now. But on the bigger range, right? Because you're trading into this week's range right now. So if it rejects here, you could look for the short with a tight stop. If you want to buy it, you're too late, in my opinion, on Palantir. I think Palantir needs to be in a correction phase for multiple months. Multiple months. Maybe look what it does back down at 145-ish. If it can build in support at 145, then maybe you could buy it. But there's no way I'd be buying it here. It could keep running. Obviously, I can't see into the future, but you're just so overbought, bro. Like you printed a 95 on the monthly time frame. It has been overbought on the monthly time frame. Let's be fair and accurate, since September in 2024. Massively overbought. Massively overbought. There's that trade on Pingu right now. That stop is way too low. I'm going to have to creep it up a lot closer. So I may get smoked on this. I was already long. I got long at 4-hour support earlier this morning. So right in here, I was in right on that close. So by adding to the trade when it pulled back into that swing low, that caused my cost basis to go up massively because I had a very small position on. So I had to play this tight. I should have, if I got up there. I don't know that it got up there. It hasn't gotten up there yet, but I need to take profits or set a take profit. So let's go ahead and do that. We always look to make at least $300 on these trades. So I'm gonna see what 40% and 66% of the trade looks like. 67% of the trade is 2/3. Oh, I needed to go up about 80%. 4,080% would be beautiful. That's close enough. Let's just call it 81. 303. And then we want to set the stop loss at about $30. Right there looks good. It's going to be a very tight trade. But hopefully the volatility's in. Let's see where we need to get. Ooh, to make $300, we need it all the way up there. Shoo! Damn. That's going to be well above high of day. I typically don't like that. Well, we'll see what happens with it. At least it's before 4-hour res. At least we can say that, right? But we need Bitcoin to stay bullish in order for that trade to work. And preferably Bitcoin to stay bullish here, and preferably a weak dominance, which we do have. So as long as Bitcoin is rising and dominance is down at least under the open, our alt trades could work out. Dominance is picking up here though. So if dominance gets super strong with Bitcoin strength, alts will suffer a little bit. So we'll see what happens. We still got the meeting at 2:30. So that's 15 minutes. So these things might just trade sideways. And if Powell comes out and sounds hawkish, he's going to destroy our trade. He's going to wreck us. And he's wrecked me many times. We're not going to get wrecked. We're going to lose $30. But obviously, you know what I mean. He can ruin a good day. So hopefully he comes out and he's super dovish. I told him they should have dropped another 50. He's never going to say that. But a dovish Powell would be really good. 1 minute to go. Yeah, we got that news. We kind of figured we were going to get that 25 basis point rate cut. I have notifications on, but never get them for your channel. That's so weird. I've had other people tell me that. I'm subscribed to a lot of people, and I don't always get their noties either. I mean, I go live every Tuesday every Tuesday morning and every Thursday morning for the public. And then if there's like a major news event, I'll go live around that major news event. Major for me is going to be either non-farm payrolls or FOMC. I used to go live for CPI, but the last few CPIs haven't really been that good. It's just CPI is basically stable. And we haven't gotten any non-farm payroll numbers in a long time. Looks like oil's back up where it was this morning. Oil had a nice drop, but there's just too much support down here on oil. If you're trying to short oil today, be careful with it. You're in this key supports here. You've got the December open, which you definitely broke down below. You've got this weekly support right there. That's essentially what's going on with oil. It is literally as choppy and sideways as it can be. So big area of support right here. And never short into support. It does look like a short. It's down. You were up for 3 days and then you had a nasty down move come. So it's like the bears turn it up around 60 and then they turn it off at 57. It's crazy. I don't know what's going on with that. I think people that trade oil are waiting on something big. They're either waiting on a bear market or they're just, I don't know. I don't know what these guys are doing with this chart, but they have turned it into garbage. Almost untradeable. Almost. We were watching the short here this morning, but because it's in the support, I didn't take it. But it did work out. It would have been a very profitable trade. You can see that. Boom. Just, I didn't take it. Oil barely moves anyway. It's like 4x. The big movers are the risky assets. Irene. Conference, 15 minutes. I'll get the link up and ready here in a second. Yeah, Irene pulling back. It had pulled back off the highs. You're still bullishly structured on the weekly. On the daily, not so much. You're probably testing like the 200 on the daily. Well, the 100. It's like in a multi-week range here. If I was going to look to buy it, I'd want to buy it around 40. I don't know what it does, so I'm not interested in buying it. But As long as you're not closing days under 41.22, that's your support. If you are closing days under 41.22, then I would not buy it. Next area is 31.66. That's just looking at moving averages. It's still way up on the year. So you're like finding support right around the yearly midpoint, which is constructive for bullish continuation as long as it can stay there. So you got this, it's in price discovery. You got this fight between bulls and a fight between the bears. The bulls are saying yearly midpoint check, let's buy it. Bears are saying no, 53 is too expensive. So until one of those wins, really not a whole lot to say about it. You can see where the support is. So that's roughly about where I would be interested in buying it. All right. Yeah, Pingu's just doing a whole lot of nothing here. It looks like they're going to wait on the news conference. I guess I could do this off screen. Give me a second here. The Federal Reserve cut interest rates Wednesday with an unusually narrow vote, underscoring the divides among bank officials over the effect rate cuts will have on the inflation and employment. The Federal Open Market Committee, the FOMC, the panel of Fed officials responsible for setting monetary policy, dropped its baseline interest rate down to a range of 3.5 to 3.75, a reduction of 25 percentage points. Available indicators suggest that economic activity have been expanding at a moderate pace. Job gains have slowed this year, and the unemployment rate has edged up through September. More recent indicators are consistent with these developments. Inflation has moved up since earlier in the year and remains somewhat elevated. The committee seeks to achieve maximum employment and inflation at the rate of 2% over the long run. Uncertainty about the economic outlook remains elevated. The committee is attentive to the risks. Let me just stop right there. Basically, that is him being hawkish. The committee seeks to achieve maximum employment and inflation at the rate of 2% over the long run. And then this part of that sentence right here. It seems up, right? And then right here. Uncertainty about the economic outlook remains elevated. That's literally talking about inflation. And that is just enough to keep the markets in a tussle, right? The committee is attentive to the risks on both sides of its dual mandate and judges that downside risks to employment. What is going on? Why is that popping up? Okay, so yeah, a little bit hawkish on the on the print. We'll see what they do at the press conference. All right, so my OBS probably has an update or needs an update because it just got disconnected for a split second. So now my chat has been disconnected and reconnected. All right. So yeah, he's a little bit hawkish. Hopefully he dials that back during the press conference. Otherwise, we're going to get smoked. I got it pulled up. We'll just wait for him to walk out and then we'll see what's what. Press the like for the algos. Thank you, Mattia. I appreciate it. And yeah, if you don't mind, you don't have to, but if you don't mind, wouldn't hurt. We trade over here. We trade live funds. We look for intraday opportunities, intra-week opportunities, intra-month, and intra-year opportunities. We do it all. Objectively, consistently. Yep. So Luna did give the short entry, but I missed it. I absolutely missed it. That's where I would have shorted it, right there. Fuck. Let me get back on it. I set an alert. It doesn't look like a short. Volume deltas are super bullish. I love where the POC is though. But that can also help breakouts to the upside. So if you start liquidating these highs, all these stops are going to get hammered. And that brings in demand. That is demand. Short stop losses is buying demand. But that's where I would have put the risk on. Luna, not Luna, but Pingu's about to get stopped. It needs to hold right here. It might want to make a fresh day low. I would jump on it again down there. But only if it rejects that lower prices. I'm not going to look to buy it if it continues lower. So yeah, the hawkish print, it's not a hawkish, like what they did is dovish, but their rhetoric in their, I don't know what you would call that, in that little thing I read was hawkish. Basically what they're saying is PCE was up. We can look at PCE real quick. Let's pull it up over here. I don't know if the PCE numbers are going to be... I don't know. Yeah, it looks the same as... It looks like it hasn't done anything, so I'm not sure what he's talking about. Not quite sure what he's talking about. But that's the Fed's preferred inflation gauge. I know CPI is up a little bit. Yeah, it's up to 3. They want 2. But, I mean, it's right where it turned around also. So it's not like super elevated. We were here early this year, literally testing the yearly open on that. We want it to hold here. But if it's coming back down here, then it's obviously looking for a fresh day low. I'm probably just going to miss the Luna short. Yeah, Bitcoin's rolling over to... Risk market's very choppy as well. Here's your 30-minute chart on futures. Very choppy. You've just smoked the top end of that range. That's literally it. And we might see a bearish day today. If it's bearish, we're not going to make money on longs. I still like it to the upside, though. He just might cause a little bit of near-term volatility by being hawkish. Here we go. Oh, sorry. Wrong one. Oh, there we go. Perfect. Here we go. They killed the music, so he's got to be on his way. And I have to be careful. For some reason, that music is copyright.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Although important federal government data for the past couple of months have yet to be released, available public and private sector data suggests that the outlook for employment and inflation has not changed.
He literally started talking and the markets rolled over.
Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In support of our goals, in light of the balance of risks to employment and inflation, today the Federal Open Market Committee decided to lower our policy interest rate by 1/4 percentage point. As a separate matter, we also decided to initiate purchases of shorter-term Treasury securities solely for the purpose of maintaining an ample supply of reserves over time, thus supporting effective control of our policy rate. I will have more to say about monetary policy and its implementation after briefly reviewing economic developments.
They should like that.
Although some key government data have yet to be released, available indicators suggest that economic activity has been expanding at a moderate pace. Consumer spending appears to have remained solid, and business fixed investment has continued to expand.
Yes.
In contrast, activity in the housing sector remains weak.
Yeah.
The temporary shutdown of the federal government has likely weighed on economic activity in the current quarter.
Damn sure,
but these effects should be mostly offset by higher growth next quarter, reflecting the reopening. In our summary of economic projections, the median participant projects that real GDP will rise 1.7% this year and 2.3% next year.
That's good.
Somewhat stronger than projected in September.
Like that.
In the labor market, although official employment data for October and November are delayed, available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions of job availability and firms' perceptions of hiring difficulty continue to decline. The official report on the labor market for September, the most recent release, showed that the unemployment rate continued to edge up, reaching 4.4%, and that job gains had slowed significantly since earlier in the year.
Okay, that might cause some
A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen in recent months.
That ain't good.
In our SEP, the median projection of the unemployment rate is 4.5% at the end of this year and edges down thereafter.
Not good.
Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run goal. Very little data on inflation have been released since our meeting in October.
Yeah. Government shutdown.
Total PCE prices rose 2.8% over the 12 months ending in September, and excluding the volatile food.
What's going on? what's going on.
In energy categories, core PCE prices also rose 2.8%. These readings are higher than earlier in the year as inflation for goods has picked up, reflecting the effects of tariffs. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have declined from their peaks earlier in the year, as reflected in both market and survey-based measures. Most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 2.9% this year and 2.4% next year, a bit lower than the median projection in September. Thereafter, the median falls to 2%.
Yeah, the market didn't like that.
Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people.
Didn't love it.
At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 3.5 to 3.75%. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals.
Bitcoin, nice and up
A reasonable
near the
base
yearly
case
open
is that
again.
the effects of
Fresh
tariffs on
highs on
inflation
ETH.
will be relatively short-lived,
Our trade still
effectively a
struggling.
one-time shift in the price level. Our obligation is to make sure that a one-time increase in the
internet
price
is
level does not
golden.
become an ongoing inflation problem.
I'm not sure what's going on with that little
But
spinny
with
winny.
downside risks to employment having risen in recent months, the balance of risks has shifted. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate. Accordingly, we judged it appropriate at this meeting to lower our policy
Pingu's
rate by a
getting
quarter
beat up
percentage
now.
point.
We're probably going to need to stop.
With today's decision, we have lowered our policy rate 0.75 of a percentage point over our last 3 meetings. This further normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2% once the effects of tariffs have passed through. The adjustments to our policy stance since September bring it within a range of plausible estimates of neutral and leave us well-positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. In our summary of economic projections, FOMC participants wrote down their individual assessments of an appropriate path of the federal funds rate under what each participant judges to be the most likely scenario for the economy.
This is like, I don't see the median, or let me see here. So longer term, 2026, looks like they want to stay around 350. So very few cuts next year. Very slow movement overall for rate cuts.
Projects that the appropriate level of the federal funds rate will be 3.4% at the end of 2026.
Market's probably going to want that to be a little bit hard,
3.1% at the end of 2027, unchanged from September.
Yeah, that's no new data.
As is always the case, these individual forecasts are subject to uncertainty, and they're not a committee plan or decision.
The market did not like that.
Monetary policy is not on a preset course, and
Came
we
off
will
the
make our
highs
decisions
hard.
on a meeting-by-meeting basis. Let me turn now to issues related to the implementation of monetary policy, with the reminder that these issues are separate from and have no implications for the stance of monetary policy.
Very volatile today.
In light of the continued tightening in money market interest rates relative to our administered rates and other indicators of reserve market conditions, the committee judged that reserve balances have declined to ample levels. Accordingly, at today's meeting, the committee decided to initiate purchases of shorter-term Treasury securities, mainly Treasury bills, for the sole purpose of maintaining an ample supply of reserves over time.
Yes, he does.
Such increases in our securities holdings ensure that the federal funds rate remains within its target range.
Get him out of there.
And are necessary because the growth of the economy leads to rising demand over time for our liabilities, including currency and reserves. As detailed in a statement released today by the Federal Reserve Bank of New York, reserve management purchases will amount to $40 billion in the first month.
I think he's
and
been
may
a
remain
decent
elevated
bid
for
here.
a few months to alleviate expected near-term pressures in money markets. Thereafter, we expect the size of reserve management purchases to decline.
Very subjective statement,
though the actual
obviously.
pace will depend on
Some
market
people hate him.
conditions.
Think he's too
In our implementation framework, an ample
Just too
supply of reserves
data-dependent.
means that the
Doesn't have
federal
any
funds rate and other short-term interest rates are primarily
balls.
controlled by the setting of our administered rates, rather than day-to-day discretionary interventions in money markets. In this regime, standing repurchase agreement or repo operations are a critical tool to ensure that the federal funds rate remains within its target range, even on days of elevated pressures in money markets. Consistent with this view, the committee eliminated the aggregate limit on standing repo operations. These operations are intended to support monetary policy implementation and smooth market functioning, and should be used when economically sensible. To conclude, the Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing our inflation sustainably down to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission.
Bitcoin's move is
At the
muted.
Fed, we will do everything we can to
the
achieve
S&P.
our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Howard.
Now's the time. We'll see if he says stuff the market don't
Thank
like.
you. Howard Schneider with Reuters. Just first turning to the
market's
statement,
already pulling back.
Just to
pretty
be
much,
clear,
just
we're on the
because
same
he's
page
gonna
here.
start answering
The
questions.
insertion of the phrase, considering the extent and timing of additional adjustments, does that indicate that the Fed is now on hold until there's some clearer signal from inflation or jobs or the evolution of the economy
Bitcoin is
along
struggling
the baseline
at
outlook?
that year open. Struggling.
Yes, the adjustments since September bring our policy within a broad range of estimates of neutral. And as we noted in our statement today, we are well positioned to determine the extent and timing of additional adjustments based on the incoming data, the evolving outlook, and the balance of risks. That new language points out that we'll carefully evaluate that incoming data. And also, I would note that having reduced our policy rate by 75 basis points since September and 175 basis points since last September, the Fed funds rate is now within a broad range of estimates of its neutral value, and we are well positioned to wait to see how the economy evolves.
And if I could follow up on the outlook there, it seems like with the
market didn't
additional
like that
GDP
answer.
growth coupled with easing inflation and a fairly steady unemployment rate, this seems like a pretty optimistic outlook for next year.
Dropped hard.
What's given rise to that? Is this an early bet on AI?
That's a 30-point
Is there some
drop.
sense of improving productivity out there? What's driving that?
So a number of things are driving what's happening in the
Jesus,
forecast.
man,
And
he
I would
always
say
does it.
if you look broadly at outside
You just
forecasts,
can't
you
stay
do see
dovish.
a pickup
That's
in
why
growth
Trump
in many of
hates
those
him.
now too. So it is.
You give us
it's
good
partly
news
that
and then you
consumer spending has
crush
held
it
up.
in the
It's been
freaking
resilient, and
press
to
conference.
another degree, it is that AI spending on data centers and related to AI has been holding up business investment. So overall, the baseline expectation for next year is, at least at the Fed, and I think with
no one
outside
wants to
forecasters
hear
too, is
him say literally the only thing that's propping up the economy is AI. Come on, bro. You can't say shit like that.
pickup in growth from today's relatively low level of 1.7%. I mentioned that the SEP median is 1.7 for this year growth and 2.3 for next year. You actually, some of that is due to the shutdown. So you can take 0.2 out of 2026 and put it in 2025. So it would really be 1.9 and 2.1. But overall, yes, for a few reasons, fiscal policy is going to be supportive. And as I mentioned, AI spending will continue. The consumer continues to spend. So it looks like the baseline would be solid growth next year.
Steve.
Thank you, Mr. Chairman, for taking our questions here. You had previously described rate cuts in terms of a risk management framework, and kind of following up on what Howard was asking, is the risk management phase of rate cuts over here, and have you taken out sufficient insurance, I guess, against potential weakness in terms of the data we might get next week when it comes to employment?
So we're going to get a great deal of data between now and the January meeting, and I'm sure we'll talk more about that. And the data that we get are going to factor into our thinking. But yes, we have if you go back, we held our policy rate at 5.4% for more than a year because
Luna's
inflation
rolling
was
over,
high,
so we missed
very
that
high,
short entry.
and unemployment
And that sucks
and the labor
because our
market
long
was really
entry is
solid at
just
that point.
not performing.
So what happened is over last summer of 24, inflation came down, and the labor market began to show real signs of weakness. And so we decided, as our framework tells us to do, that when the risks to the two goals become more equal, you should move from a stance that favors really dealing with one of them, in that case inflation, to a more balanced, more neutral setting. And so we did that. We did some cutting, and then we paused for a while to work our way through what was happening in the middle of the year. And then we resumed cuts in September, and we've cut now 3. We've now cut a total of 175 basis points. And as I mentioned, we feel like where we're positioned now we're well positioned to wait and see how the economy evolves from here.
If I could just follow up on the SEP.
Well positioned.
You have a whole lot of...
That's always a good place
big
to
increase in
be,
the growth
brother.
numbers, but not a big decline in the unemployment numbers. And is that an AI factor in there? What is going on in terms of the dynamic of you get...
The world's first titanium nonstick pan. It's going to blow your hair back.
I don't
On Mike Pagale.
Is obviously higher productivity. And some of that may be AI. It just also, I think, productivity has just been almost structurally higher for several years now. So if you start thinking of it as 2% per year, you can sustain higher growth without more job creation. Of course, higher productivity is also what enables incomes to rise over long periods of time. So it's basically a good thing. But that's certainly the implication.
I might take a short on Bitcoin just to hedge out that risk on Pingu.
Thank you. Colby Smith with the New York Times. Today's decision was...
Bitcoin actually looks to me like it's trying to break out. There just isn't. He's not supporting the bid, but the structure on the chart still looks okay. And of course, that is going to be until it rolls over and starts dumping. I don't like this chop here. I would love to see it just start to trend, but you're not even getting a trending move on risk markets either. Like, it's been bouncing up and down in this candle like for the entire time. So you're not seeing that trending move yet.
Was clearly very divided. It wasn't just the two official dissents.
I haven't made my mind up yet.
There were also soft dissents from
here's
four
about where you'd be
others.
looking for that short on Bitcoin.
And I'm just wondering if this reluctance from several people to support recent reductions suggests that there is a much higher bar for cuts in the near term. And what exactly does the committee need to see if things are well positioned right now to support a January reduction?
Sure. So let me
a
just
little
say,
bit higher, actually.
As I mentioned, before, the situation is that our two goals are a bit in tension.
92, 95, like 92, 95.
Everyone around the table at the FOMC agrees that inflation is too high and that we want it to come down, and agrees that the labor market has softened and that there's further risk. Everyone agrees on that. Where the difference is how do you weight those risks, and what does your forecast look like, and where do you, ultimately where do you think the bigger risk is, and it's very unusual to have persistent tension between the two parts of the mandate, and when you do, this is what you see, and I think it's actually what you would expect to see, and we do see it. Meanwhile, the discussions we have are as good as any we've had in my 14 years at the Fed. They're very thoughtful, respectful, and you just have people who have strong views, and we come together and we reach a place where we can make a decision. We made a decision today. We had 9 out of 12 supported it, so fairly broad support. But it's not like the normal situation where everyone agrees on the direction and what to do. It's more spread out, and I think that's only inherent in the situation. In terms of what it would take, we all have an outlook in terms of what's going to come, but I think ultimately having cut 75 and the effects of the 75 basis points will only begin to be coming in. As I've said before a couple times, we're well positioned to wait to see how the economy evolves. We'll just have to see. And we will get, as you know, quite a bit of data. I should mention on the data, as long as I'm talking about it, that we're going to need to be careful in assessing, particularly the household survey data. There are very technical reasons about the way data
instead of shorting Bitcoin, we could look at Farcoin
in some
instead.
of these measures, both in
It's actually
inflation
into
and
resistance
in
here at
labor,
November's high.
in the labor market.
So let's
that
get
the data
that
may be
instead.
distorted and
Let's
not
watch
not just
Sparkcoin
sort
instead.
of more volatile, but distorted. And that's it's.
I gotta cancel these
And that's really
orders
because
on
data
Bitcoin.
was not collected in October and half of November. So we're going to get data, but we're going to have to look at it carefully and with a somewhat skeptical eye by the time of the January meeting. Notwithstanding that, we will have a lot of the December data by the time of the January meeting. So we expect to see a lot more, but I'm just saying that what we get for example,
3792.
CPI or for the household survey, we're going to look at that really carefully and understand that it may be distorted by very technical factors.
And just one more question on dissents. I mean, you talk about it in a very positive way, just given the complicated nature of the situation we're in economically. But is there any point in which those dissents become counterproductive?
VIX looks
Either to
really good for the markets to break out. Look at the VIX. I mean, this is a full-on resistance test, and it failed hard. Like, I mean, I don't understand why these things aren't trending to the upside yet. Bitcoin's still just a neutral doji on the day, and this news conference pretty much over.
the Fed's communication and the messaging around the policy path forward?
I don't feel that we're at that point at all. I don't. I would say, again, these are good, thoughtful, respectful discussions, and you hear people say, and you hear many outside analysts say the same thing. I could make a case for either side. I mean, I could make that case. It's a close call. We have to make decisions, and we always hope that the data will give us a clear read. But in this situation, you have competing. If you look through the SEP, you'll see that a very large number of participants agree that risks are to the upside for unemployment and to the upside for inflation. So
That
what do?
should
You've got
crush the
one tool.
market.
You can't do two things at once. So at what pace do you move? What size moves do you make, and that kind of thing? And what's the timing of them? It's a very challenging situation. I think we're in a good place to, as I mentioned, to wait and see how the economy evolves.
Nick.
Nick Timmeros of the Wall Street Journal. Chair Powell, there's been some discussion recently of the 1990s. In the 1990s, the committee did two discrete sequences of 3 quarter-point cuts, one in 1995-96 and one in 1998. And after both of those, the next move in rates was up, not down. With policy now closer to neutral, is it a foregone conclusion that the next move in rates is down, or should we think of policy risks as genuinely two-sided from here?
36.92.
So I don't think that a rate hike is anybody's base case at this
I'll
point.
wait for it to
And
fall
I'm not
back under
hearing
that before I look
What
for that
you
short.
see is some people feel we should stop
We're
here
seeing the markets
and
pump
that we're at the
now. I
right
thought
place
they
and
would
just
hate
wait.
that. So we
Some
might be
people
getting
feel
ready
like we
to
should
get that
cut
move on.
once or
Hopefully we
more
get that move on
this year and
PNB.
next year. But when people are writing down their estimates of policy of where it should
just
go,
not
it is
looking good.
either holding here or cutting a little or cutting more than a little. So
Not
I don't
looking
see
good
that
at
as I
all.
don't see the base case as involving
Mark
that.
point
So of
looks
course, a data set of 2, now 3, is not a big data set. But you are right about those 2 3-cut times in the 90s.
If I could follow up, the unemployment rate has been rising very gradually for the better part of 2 years, and indeed the
Yeah,
statement
VIX
today
falling hard.
no longer describes
So
the
be
unemployment
careful
rate
on
as
the
remaining
Farcoin
low.
short.
What gives you confidence it won't continue rising in 2026, especially when housing and other rate-sensitive sectors still appear to be feeling restrictive policy from the, notwithstanding the 150 basis
They
points?
look
in
like they
cuts
want to
prior
go.
to
They're
today?
just struggling
So,
to go.
I think the idea is that with now having cut 75 basis points more now, and having policy, I'd call it in a broad range of plausible estimates of neutral, that will be a place which will enable the labor market to stabilize or to only tick up 1 or 2 more tenths, but we won't see, any kind of a sharper downturn, which we haven't seen any evidence of at all. At the same time, policy is still in a place where it's not accommodative, and we feel like we have made progress this year in non-tariff related inflation, And as tariffs come through, as they flow through, that'll show through next year. But as I said, we're well placed to wait and see how that turns out. That is our expectation.
You're right. You're right back above the November open
the data, and
on the
it'll tell us
cash
whether we
market.
were right or not.
Claire.
Big pump move there.
Claire
Crazy.
Jones, Financial
Into
Times.
resistance, though.
A lot of people interpreted your comments at the October meeting that
Bitcoin's still
when
not
there's a
doing
bloody
anything. It still has
situation,
not
we
broken
slow
out.
down, to mean that there wouldn't be a cut now, there'd be a cut in January instead. So it'd be good to get a sense of why did the committee decide to move today rather than to move in January instead? Thank you.
Right. So in October, I said
Still not breaking out.
that there was no certainty of moving, and that was indeed correct. I said it's possible you could think about it that way, but I was careful to say other people could look at it differently. So why did we move today? I would say point to a couple things. First of all, gradual cooling in the labor market has continued. Unemployment is now up 0.3 from June through September. Payroll jobs averaging 40,000 per month since April. We think there's an overstatement in these numbers by about 60,000, so that would be negative 20,000 per month. And also, just to point out one other thing, surveys of households and businesses both show declining supply and demand for workers. So I think you can say that the labor market has continued to cool gradually, maybe just a touch more gradually than we thought. In terms of inflation, it's come in a touch lower, and I think the evidence is kind of growing that what's happening here is services inflation coming down, and that's offset by increases in goods, and that goods inflation is entirely in sectors where there are tariffs. So that does build on the story, and so far it's only a story, that this is the goods inflation, which is really the source of the excess at this point, almost more than half the source of the excess inflation is goods, is tariffs. And you've got to say then, so what do we expect from tariffs? And I would say that is to some extent down to looking for broader economic heat. Do we see a hot economy? Do we see constraints? Do we see what's going on with wages? You saw the ECI report today. It doesn't feel like a hot economy that wants to generate, Phillips curve kind of inflation. So we look at all those things, and we say that this was a decision to make. It obviously wasn't unanimous, but overall that was the judgment that we made, and that's the action we took.
68.89.
Just on the ample reserves point, how concerned were people around the table about some of the tensions we've seen in money markets? Thank you.
I wouldn't
You're
say
above
concerned.
November's
So
high
what
on
really
cash
happened is
market.
this.
Bitcoin's
Balance
still
sheet
just
shrinkage, sometimes called
dropping.
QT, went on. We had a framework in place for monitoring it, and nothing happened. The overnight reverse repo facility went down
Pingu
pretty
just
much
can't
close
get
to
anything
zero.
going.
And then beginning in September, the federal funds rate started to tick up within the range.
I mean, the volume
and it
looks
ticked
good
up
for
almost
it to
all the
just
way to
go. Look at it.
interest-on reserve balances. There's
I
nothing wrong
don't
with
know
that.
why it can't.
What that's telling you is that we're actually in reserves, in an ample reserves
Look at all
regime.
this volume
So,
here. This
you know,
thing
we
should
We knew this was
explode.
going to come. When it finally did come, it came a little quicker than expected, but we were absolutely
This
there
press conference
to take
has
the
got it
actions that we
bummed
said we
out.
would take. So, and those actions are today. So, we announced that we're resuming reserve management purchases. That is completely separate from monetary policy. It's just we need to keep an ample supply of reserves out there. Why so big? The answer to that is
deltas are bullish too.
If
So
you look ahead, you will see that April 15th
don't know
is
what's going
coming
on
up,
with it. It's just
and
struggling.
Our framework is such that we want to have ample reserves.
Long as
even at
Farcoin's
times
above
when reserves are at a
38.92,
low
I'm not
level
trying to put that
temporarily. So
short
that's what
on.
happens on tax day. People pay a lot of money to the government. Reserves drop sharply and temporarily. So this seasonal
I'm sorry,
buildup that we'll see in the next few months was going to
36.92?
happen anyway. It was going to happen
37.92.
because April 15th is April 15th. There's also a secular ongoing growth of the balance sheet. We have to keep reserves call it constant as it relates to the banking system or to the whole economy. And that alone calls for us to increase about $20-25 billion per month. So that's a small part. That's going on. It's also happening in the context of a temporary few-month front loading to get reserves high enough to get through the tax period in mid-April. So that's what's happening there.
Andrew.
Thanks, Mr. Chairman. This is the last post-FOMC press conference before an important Supreme Court hearing next month. Can you talk about how you're hoping the Supreme Court will rule? And I'm just curious why the Fed's been so reticent on such a pivotal matter.
Because they don't get into political
I want to
stuff,
address
dude.
here, Andrew. We're not legal commentators. It's before the courts, and we think we don't think that we help matters by trying to engage as a public discussant of that. I'll give you a mulligan, though.
No, thanks. I don't know if that means I get 3 questions, but
No, just one.
Just one
I guess I wanted to
more.
come back to the 1990s question, and like, do you see that as a useful model for thinking about what is happening in the economy right now?
I don't think it rises to that level. So I did think that in 2019, where we cut 3 times, but this is such a unique situation. It's not the 1970s, let's put it that way, but we do have tension between our 2 goals. And so that's just unique in my time at the Fed, and I think going back a long ways, we haven't had that. In our framework, as you know, says that when that's the case, that we try to, take a balanced approach to the 2 things, and we look at how far they are and how long it would take to get them back to each of them back to the goal. And that's a very subjective analysis, really. But it just tells you you've got to. And I think ultimately what it says is when they're broadly equally threatened or equally at risk, you should be kind of neutral. Because if you're either accommodative or tight, you're favoring one or the other goal. And so we've been sort of moving in the direction of neutral. Now we're in the range of neutral. We're in the high end of the range of neutral, I would say. And that's what we're doing now. It so happened that we've cut 3 times. That we haven't made any decision about January, but as I've said, we think we're well positioned to wait and see how the economy performs.
Edward.
Thanks, Mr. Chairman. Edward Lawrence with Fox Business. I wanted to ask you, the inflation expectations has come down in your SEP report. Do you see the tariff price increases as passing through in the next 3 months? Is it a 6-month process that we're looking for that to end? And then because of that, is jobs the threat to the economy?
So with tariff inflation, there's the announcement of a tariff, and then they start to take effect, and then it takes some months. Goods may have to be shipped from other parts of the, it may take, quite a while for an individual tariff to take its full effect. But once it's had that effect,
just
then the question
cannot
is,
be devastating.
Isn't it just a one-time price increase? So we
cannot
actually
do
look
it.
at all of the announcements and what you get from all that. You see sort of for each one of them, there's a time period.
Inflation
and
is
it's
a
fully
risk,
in.
but it's.
So if there are no new tariff announcements, and we don't know that, but let's assume there are no major new tariff announcements, inflation from goods should peak in the first quarter or so, right, or roughly. We haven't been able to predict this with any precision. No one is. But call it the first quarter or so of next year should be the peak. And from here, it shouldn't be big. It should be a couple tenths or even less than that. We don't really have precision on this. And after that, again, if there are no new tariffs that are being announced that will take 9 months to get fully in, and 9 months is also an estimate, then you should start to see that coming down in the back half of next year.
And I want to see if I could address sort of the elephant in the room. The president's been talking openly about a new Fed chairman. Does that hinder your current job right now or change your thinking at all?
No.
Not at all, bro.
Mike.
No mulligans for it. Michael McKee from Bloomberg Radio and Television. 10-year rates are 50 basis points higher than when you started cutting back in September of
what's up with that?
2024, and the yield curve basically has been steepening. Why do you think that continuing to cut now, especially in the absence of data, is going to bring down the yield on the thing that will move the economy the most?
So we're looking at the real economy and focusing on that. And you've got when the long bonds move around, you've got to look at why they're moving around. If you look at inflation compensation, it's very that's one part of it is inflation compensation break-evens, and they're at very comfortable levels. They're at levels consistent once you get out past the very short term now. Break-evens are at quite levels that are quite consistent with 2% inflation over time. So there's nothing happening with rates going up out there that suggests concern about inflation in the long term or anything like that. I mean,
everything is literally moving except
surveys. Surveys are all saying that the public understands our commitment
Risk
to 2%.
has just made a fresh all-time high just about.
So,
VIX is back under 15
why
or
rates going up?
16.
It has to be something else. It must be
oil
an
skyrocketing,
expectation of higher growth or something like that.
which is weird. It shouldn't be
going on. I mean,
dollars also pumping. I mean, dumping.
Toward the end of last
gold
year, which was
pumping.
not to do with us. It was to do with other developments.
Bitcoin.
Well, you just mentioned that the public is expecting you to get back to 2%, and Americans overwhelmingly are citing high prices, inflation as their number one concern. Can you explain to them why you're prioritizing the labor market, which seems relatively stable to most people, instead of their number one concern, inflation?
It should be able to break out.
We, as you know, we have a network of contacts in the U.S. economy, which is really unmatched if you go through the 12 reserve banks. So we hear loud and clear how people are experiencing really costs. It's really high costs. And a lot of that is not the current rate of inflation. A lot of that is just embedded higher cost due to higher inflation in 2022 and 23. So that's what's going on. And so the best thing we can do is restore inflation to its 2% goal, and our policy is intended to do that, but also have a strong economy where real wages are going up, where people are getting jobs and earning money, and we're going to need to have some years where real compensation is higher, it's positive, significantly positive, so nominal wages are higher than inflation, for people to start feeling good about the affordability issue. And, so we're working hard on that. We're trying to keep inflation under control, but also support the labor market and strong wages so that people are earning enough money and feeling economically healthy again.
Victoria.
Hi, Victoria Guida with Politico. Just to follow up on that, I mean, this is now the third time that you've cut this year, and inflation is around 3%.
Risk is not at all-time highs.
So
it's just above the November
message
high.
that you're sort of trying to send with that you're okay with where inflation is for now, as long as people understand that at some point you still want to get back to 2%, because inflation is relatively stable where it is.
Everyone should understand, and the surveys show that they do, that we're committed to 2% inflation, and we will deliver 2% inflation. But it's a complicated, unusual, difficult situation where the labor market is also under pressure, where job creation may actually be negative. Now, supply of workers has also gone way down, so the unemployment rate hasn't moved that much. But, it's a labor market that seems to have significant downside risks. People care a lot about that. That's their jobs. That's their ability, if they get laid off or if they're entering the labor force, to find work. So that's really important to people. The story with inflation, and we're well aware that this is a story at this point, is that if you get away from tariffs, inflation is in the low 2s, right?
Do it. You
so
can
it's
do
really
it.
tariffs
Get out there.
that's causing most of the inflation to overshoot.
Break
and
out
we do
above
think
that
of
level,
those
man.
as likely,
It's a big level.
in the current situation, as likely to be a one-time price increase. Our job is to make sure that it is, and we will do that job. But right now, you've got this difficult balance, and there are risks to both sides. There's no risk-free path. If it was just inflation and the labor market was just really strong, and then rates would be higher, as they were for more than a year. We didn't have to worry about inflation. Sorry about the labor market. Because the labor market, unemployment was very low, if you remember, when inflation was very high. There was a labor shortage, so we could focus entirely on
Let's go, Bitcoin.
inflation.
Get up there.
Now,
Fresh
it's
day
different.
high
We actually
on
have risks
Bitcoin.
to both. And I think we're doing the best we can
Fresh
for
day
people.
high on Bitcoin.
They also care about their jobs. They do care about affordability. And the best thing we can do there is both to support economic activity, but also, make sure that when tariff inflation goes down and disappears, inflation lands around 2%.
There it goes. It's starting to get some movement now.
Thanks so much, Elizabeth Schulze with ABC News. Just to follow up, you keep talking about job growth being negative. Why do you think job growth is so much worse than some of the official data? Why do you think job growth is,
Don't
to
roll
follow up
over
on your
now.
comments about job growth, why is it so much worse than the official data is suggesting?
We haven't got the official data for a long time.
We know, I think, I don't think this is particularly controversial. It's very difficult to estimate job growth in real time. They don't count everybody. They have a survey. And there's been something of a systematic overcount. And so we expected, and they correct it twice a year. So the last time they corrected it, we thought the correction would be 800,000 or 900,000. I won't get the numbers exactly right. And that was exactly what happened. So we think that has persisted. And so there's an overcount in the payroll job numbers, we think, continuing, and it will be corrected. I don't have the exact month in my head right now, and that's just, I think forecasters generally understand that. So, and we think it's about 60,000 a month, so 40,000 jobs could be negative 20, and that could be wrong by 10 or 20 in either direction. But in any case, but the thing is, that's job creation in a way. That's
Bitcoin
demand.
is up almost 2%.
Supply
Pingu
come
has
down quite
moved
sharply.
literally
So,
2%.
If you had a world where there's just no growth in workers and you really don't need a lot of jobs to have full employment, some people argue that's what we're looking at. But I think a world where job creation is negative, I just think we need to watch that situation very
clearly
carefully
we got
and be in a position where we're not pushing down on job creation.
We'll have that sometimes.
When we're talking about supply, we have seen major American employers like Amazon cite AI in job cuts. How much right now are you factoring in AI into the current weakness in the job market?
So it's probably part of the story. It's not a big part of the story yet. We don't know whether it will be. But for example, if you look at, you can't miss the big announcements of layoffs and also companies saying that they're not going to hire anybody for a long time, and they cite AI. That's all clearly happening. At the same time, people are not filing for unemployment insurance, and since job creation, job finding rates are extremely low. If there were big numbers of layoffs, you'd expect the continuing claims to go up, and you expect new claims to go up. It really haven't much, so it's a little bit curious. But longer term, though, the question is, what are we going to see here? And we don't know, but it's it may be that in past technology, really significant technology innovation eras, you have seen some jobs destroyed and other jobs made. Ultimately, what's happened for a couple hundred years is when you get through all that, you have higher productivity and you have new jobs, and there are enough jobs for people. This may be different. It's every time we have a wave of technology, we think, this could put a lot of people out of work. What are they going to do?
ETH is
in the past,
moving
there's always
back up
been
to the
more work and higher productivity, and incomes have risen. What will happen here, we're going to have to see. But right now is such early days. We don't think we see much. It's certainly not showing up in layoffs yet.
Enda.
Thank you, Chair. Enda Curran, Bloomberg News. Given the breadth of views on the policy
get up there and fill me on
why
that
is there
take
such a division of views between the policy
on
the
the
committee?
day?
Thank you.
Why is there such a division of views
been a
between
pain
the
in the
presidents
ass.
and the board members?
It's not so stark as that. The views are more varied in each group as well. There's some of that, but I would say they're also governors and they're people on both sides in both groups. I wouldn't put too much in that.
Okay, and just to follow up, please, given your growth upgrade, how would you factor in, or what would be the economic impact if the Supreme Court is to strike down the tariffs that they're currently hearing in terms of growth and inflation? Thank you.
I really don't know. It would depend. It would depend on a whole bunch of things we don't know. So I can't really help you there.
Christine. Thank you.
Thank you, Chair Powell. Christine Romans, NBC News. I wanted to ask you about how the higher income households are really driving spending right now. They're backed by home equity and stock market wealth, but lower income consumers are really struggling with the accumulation of 5 years now of rising prices. It's price levels, not really the inflation rate, holding some of these families back. How sustainable is this so-called K-shaped economy, and what are the Fed's thoughts on whether that's a risk going forward?
So we do, through our vast network of contacts and just through our observation of what's going on in the economy, we hear about this a lot. If you listen to the earnings reports for consumer-facing companies that tend to deal with low and moderate income people, they'll all say that we're seeing people, tightening their belts, changing products that they buy, buying less, and that sort of thing. And so it's clearly a thing. It's also clearly a thing that, asset values, housing values, and securities values are high, and they tend to be owned by people who are at the higher end of the income and wealth. So as how sustainable it is, I don't know. Most of the consumption does happen by people who have more means. I think the top third accounts for way more than a third of the consumption, for example. So it's a good question how sustainable that is. The best we can do is to have a price stability and a strong labor market. What we saw, for example, what we saw at the end of the very long expansion that ended with the outbreak of the pandemic, we saw that it was 10 years and 8 months or something like that, the longest one in recorded history. In the last 2 years, the largest part of the wage gains were going to people in the bottom quartile, the bottom part of the low and moderate income. So, having a strong labor market for a long period of time is really, really good from a social standpoint. It's helping people at the lower income levels, and that's what we all want to get back to. But we got to have price stability, and we got to have full employment, maximum employment.
And just quickly, you mentioned the housing market remains kind of weak. With these rate cuts that we've seen, is there a chance we're going to see more affordability in the housing market so more people can maybe enjoy that part of wealth creation? I mean, the average age or median age of a first-time home buyer is now 40 years old. That's the highest on record.
Yeah, so the housing market faces some really significant challenges. And I don't know that, a 25 basis point decline in the federal funds rate is going to make much of a difference for people. Housing supply is low. Many people have very, very low rate mortgages from the pandemic.
Oh, man.
Are potbelly wraps really delicious, or are they just a lighter option?
Yes.
Are they expensive for them to move? And we're a ways away from that changing. Also, we haven't built enough housing in the country for a long time, and so a lot of estimates suggest that we just need more housing of different kinds. So, housing is going to be a problem, and
Bitcoin's
really
almost
the
about to
tools
take out
to address
yesterday's
it are we can raise and lower interest rates, but we don't really have the tools to address a secular housing shortage, a structural housing shortage.
Yesterday had a nice paint.
Thanks. Chris Rugaber, Associated Press. You mentioned on inflation, services inflation being low, goods inflation looking like maybe it'll peak. We had the wages report you mentioned today showing moderating wage growth. Where are there inflation risks? It looks like inflation is cooling, in your view. At the same time, you have potentially negative hiring.
34 is the all-time high on the SPX
why aren't we
cash
hearing more
market.
about maybe more cuts in this environment?
Well, I think the risk of inflation
totally
is pretty clear to see, and
at
that
the
is,
yearly open. That's good.
We see higher inflation. As I mentioned, most of the inflation over target is from goods, and we estimate, we expect, most of us, that inflation will be a one-time price increase and then come down. We just came off an experience where inflation turned out to be much more persistent than anyone had expected. Is that going to happen now? So that's the risk. The risk is either that tariff inflation just turns out to be more and more persistent, maybe because companies who are now holding back from passing through the tariffs will just keep doing that. So you see that. I think the other possibility is less likely, and that is just that
wrap it up,
the labor market gets tight or the economy gets tight, and you see just traditional
rookie
inflation.
questions.
I don't see that as particularly likely. But so I think again, all across the committee, people see the picture pretty similarly, but see the risks quite differently. And some people do see the inflation risk, and I wouldn't dismiss that case. I don't dismiss that case, but you've got to make an assessment, and this is the assessment we made.
Hi, Chair Powell. Neil Irwin with Axios. So this has come up a couple of times today, but to be clear, do you believe that we're experiencing a positive productivity shock, whether from AI or policy factors or whatever? And how much is that driving the higher GDP projection in the SEP?
So yeah, I mean, I never thought I would see a time when we had 5-6 years of 2% productivity growth. This is higher. This is definitely higher, and it was before it could be attributed to AI. I also think if you look at what AI can do, and if you use it in your personal life, as I imagine many of us have, you can see the prospects for productivity. I think it makes people who use it more productive. It may make other people have to find other jobs, though. So it could have productivity implications while also having social and labor market implications that we don't have the tools to deal with. But yes,
AI will make things
we're
cheaper
definitely seeing higher
first.
Productivity. I think it's a little quick to be saying it's generative AI, but
if you don't need a lot of employees to put out your products, obviously that's where they think the first benefits of AI will come from. Lowering costs on goods and services, it's to be determined.
I don't know. The pandemic may have induced people to do more automation and do more things with computers to replace people, and that raises productivity, output per hour.
Does that imply a higher neutral rate, and therefore the policy might be a little easier than it seems?
You definitely need to invest in the AI boom that is coming. I honestly believe that. I mean, especially if you have a job right now where it could ultimately be affected by AI. So you definitely need to get at least some risk in that sphere of the market.
All things equal, yes, but all things aren't equal. There are many things pushing in different directions on where the neutral rate would be. But yes, that argument does come up.
Matt Egan.
Thanks, Chair Powell. Matt Egan with CNN. After today, you only have 3 more meetings at the helm of the Fed. Since becoming Fed chair, you've seen multiple trade wars, the pandemic, COVID reopening, period of high inflation. I know your term's not up as chair until May, but I'm wondering if you've given any thought to what you want your legacy to be.
My legacy. My thought is that I really want to turn this job over to whoever replaces me with the economy. And I really want to turn this in different directions on where the neutral rate would be. But yes, that argument does come up.
Matt Egan.
I gotta hear that again.
Thanks, Chair Powell. Matt Egan with CNN. After today, you only have 3 more meetings at the helm of the Fed. Since becoming Fed chair, you've seen multiple trade wars, the pandemic, COVID reopening, period of high inflation. I know your term's not up as chair until May, but I'm wondering if you've given any thought to what you want your legacy to be.
My legacy. My thought is that I really want to turn this job over to whoever replaces me with the economy in really good shape. That's what
basically
I want to do.
made fresh highs,
inflation to be under control.
Bitcoin's right back down to
2%, and I want the labor market to be strong.
It just can't get anything going.
And all of my efforts are to get to that place. They have been all along, but ultimately, That's what I'm, and it's, I don't have time to think about bigger things. I hope many years ahead to worry about that, but there's enough to do.
Relatedly, have you given any more thought, and can you tell us any more about your plans on whether or not you plan to stay on the Fed Board of Governors even after your term as chair expires?
Again, I'm focused on my remaining time as chair. I haven't
job at hand.
got anything new on that to tell you.
Go to Mark for the last question.
Thank you. Last question.
Chairman Mark Hamrick with Bankrate. Even while many price levels remain elevated, the reductions in the federal funds rate means that savings rates, or yields to be more precise, have peaked while key borrowing rates remain elevated. And that's, as we've discussed here, as many Americans struggle with liquidity or emergency savings challenges. Is that just collateral damage or an unintended consequence because your tools are limited in addressing individual or household liquidity constraints, insufficient money in the bank?
I don't know. I wouldn't agree that that's collateral damage of our. I mean, over time, we do what we do in order to create price stability and maximum employment, and those things are hugely valuable to all of the people we serve. When we raise rates to bring inflation down, that does work by slowing the economy, but we've moved back our policy back down to where it's certainly not strongly restrictive at this point. I think it's sort of in the range of neutral. So that's what we're trying to do, and I would want people to understand that. I think what people are feeling is the effect of higher prices. There was a global wave, sort of every large economy in the world, every large open economy, market-based economy in the world had a wave of inflation that looked an awful lot like ours. We actually came through better than any other country, substantially better. We had higher growth. We had better labor market. And this is really due to the American economy. We have an extraordinary economy, and
CPI is
people
down.
are innovative. They work hard.
But
and
eggs are up.
So
milk is up. Bread is up.
All of us who work in economics jobs are really fortunate to have the U.S. economy. So thank you very much.
It's the best economy in the world, no doubt about it. And unfortunately, it's rough out there for normal American citizens, and it's going to be rough as long as you got housing the way it is right now. It's going to be very rough for a single income home to do any good. I don't know what they're going to do to fix the housing problem, but it's people invest in their 401ks and stuff like that. They need money now, basically what he's trying to say. But getting the rates down is good to help that, because you don't get taxed on loans. So people, if they got good credit, they can get loans at a lower rate. That's always good. You don't want to have to pay exorbitant rates on loans. So you can get loans to get liquidity. I just don't. Yeah, I get it. People need to learn other skills to help bring in more revenue streams. That's what they should do, I guess. I don't know. Not work harder necessarily. Do something you love to do and figure out a way to monetize it. All right, so that's it for the Fed press conference. Obviously, there wasn't very many good questions in that one for whatever reason. They just struggling to ask any good, decent questions. A lot of the political commentating he is not going to do. They are going to release everything that was said today in this meeting. I always read over that just in case I missed something. I don't think I missed anything. S&P 500 is just right at the door of making fresh all-time highs. Bitcoin is struggling today. I mean, if you look at the daily that you put in yesterday versus the daily that you have today, if I didn't know that there was a Fed press conference and a rate cut and the decision was to cut rates, if I was only looking at this chart, I would call you a liar. It is very muted. It is obviously restricted. I don't know if that's because there just is no demand for Bitcoin at these prices. There should be. If there was demand for Bitcoin at 120K, there should definitely be demand for Bitcoin at 94K. That's the way I look at it. But obviously, a lot of people got liquidated on this big down move, and those people are probably not coming back into Bitcoin. Yeah. And banks and the big investors that are scooping up all the Bitcoins, even though they're scooping up all the Bitcoins that have been sold lately, they can still short futures and options. So they can still hold a short position, meanwhile scooping up all the Bitcoin. And then once they've scooped up all they want, they can then take their short off, right? Like if you think about it, essentially they can keep prices stagnant, but I don't like to act like it's manipulation that's keeping the price down. I like to look at it as simple supply and demand. And we really don't care. I mean, obviously, if you own Bitcoin, you want it to go up. I get it. But we don't really care if it goes up or down, because we know if it's trending, we're going to make money. As simple as that. Pingu potentially could break out today. The day ain't over. It doesn't look like it wants to. It's definitely struggling. This is a 4-hour chart. I was showing you the 15-minute chart where my take profit was. It was well over the day high. This candle did get my take profit, so that was a successful trade. Farcoin ultimately did break out above that 37.92 level that I was watching very much. So yeah, that was down here. I was looking at this level right in here. If it was going to continue to stay under this, then I was thinking about executing a short position just in case Farcoin, or just in case Bitcoin and Ethereum struggled to break out. Ethereum did in fact break out and set fresh day highs, and it took out yesterday's high as well, but it already did that pre FOMC rate decision. But you can see it did ultimately break out and make a fresh day high today as well. So Ethereum looks kind of good. It's muted. Today's range is definitely muted. So you could see upside continuation on these. Be very careful if you are looking for shorts on these things. Bitcoin currently testing and trying to hold support at the daily 21 exponential. The yearly opening range is the resistance right here. The yellow line, that's your yearly open. This line dictates whether Bitcoin is either up on the year or down on the year. And your yearly trend is the macro trend. So as of right now, Bitcoin is currently back up on the year. It's neutral, but it's still up. It's better than down and trending down, making fresh yearly lows. We haven't done that yet on Bitcoin. If it fails to break out here and get any kind of upside continuation move, I would be interested in putting on some kind of positioning for the downside just in case, simply because it's failing to break out. You got 3 hours, 28 minutes left on this daily candle close. And like I said, it could definitely break out today still. We don't know what's going to happen, but like that volume buildup on Pingu, I honestly thought it would get a larger move than that. It's muted a little bit here. So you can see how much volume you got trading in Pingu today on the deltas versus what you had yesterday, right? A lot different. Yesterday was a pretty big move. We could be seeing it muted because of that. We don't know. We just do not know. But good trade anyways. It was a great trade. It made money, and that's what we're trying to do. I don't see any lower prices from AI. Well, I mean, here's the thing, right? If you sell a widget at $20 a widget and you have to pay an army of 5,000 people to produce that widget, the theory behind it is if you no longer have to pay those 2,000 people, then you can bring costs down. What we do know is people are very greedy. So the guy that does that fires or lays off 2,000 people to get his production numbers up, his profitability is going to skyrocket because he doesn't have those costs to pay people. So in the long run, it should bring goods costs down. Now, whether it does or not is to be determined. I'm sure somewhere down the line, there will be some kind of rules that state, look, I don't know, right? This country is founded upon capitalism, and capitalism is make as much money as you can and pay taxes on that money. That's the theory behind AI. I know there are a couple big streamers out there talking about, like, I don't know, countrywide, like everybody will be able to just get a check or something because productivity is going to skyrocket so much that everybody's just going to get a check. In order to do that, you would have to literally tax all the top end people to death in order to make it like equal pay or whatever across the nation. I don't think that. I think you would be better off investing into your own future. I think if everybody looked at it that way, let me just invest into me, invest into my future, you would be better off than hoping and praying that AI is going to be some magical tool that's going to fix everybody's problems. If you have problems with money, that's AI is probably not going to be very helpful in that term. You know what I mean? But I mean, you can learn. I mean, a lot of people that are already here do know how to trade mostly, because most of the people that listen to me, following me for a while now, I don't know, everybody. I know for sure there are several people that are profitable. I get DM'd all the time, and that's good. I mean, that they'll be able to carry that skill on into their lives for the rest of their lives. As long as capital markets are a thing, we're going to trade them. And capital markets are a fantastic way to generate revenue. Absolutely. That's why we love trading Fartcoin. The asset itself moves over 5% every single day. So if you're really good at managing risk, you're going to be able to extract value out of something like that. Or if you can't yet, I will do my best to teach you how. He didn't say anything that was really negative. He does not like to be dovish or come off as super dovish. He kept insinuating that inflation is still very scary, or they're afraid that it's going to be extremely elevated. I don't think that's going to happen. I think what we're seeing take place now is going to be pretty much what we're going to see. Jobs numbers are going to come down, or unemployment numbers are going to go up, just because of this president's policies and what they've been doing to illegal immigration. So that's going to probably put some unemployment numbers up, but we're not seeing it yet. To be fair, we haven't gotten an NFP print in the last 2 months. So we don't really know where jobs numbers are. We are seeing headlines all over the place of people being laid off, though. Thousands of people here, thousands of people there. So those numbers are probably going to go up a little bit. As long as there's no major spike, like it doesn't go up hugely quickly, then I think markets will be okay. As long as we're in an unrestricted territory. It's the bond market. I think if the bond market was to be able to stop going down, that would probably ease a lot of people's fears right now. Bond market might not have any effect on crypto whatsoever. So with crypto, we're just going to continue to trade the levels. Obviously, if on the daily time frame, the 21 exponential is trending up with price, then you want to be in a buy the dip mentality. As long as you haven't made a fresh yearly low, I think all the down moves can be looked at as dip buying opportunities. Since we've basically set this low 3 weeks ago, every down move has been bought up. We're just not seeing any upside continuation from that. All we're seeing literally is it's sideways. It's as sideways as it can be. So that's a little bit nerve-wracking. But the fact that the sellers are not able to force it down and make fresh lows is a good sign. Yesterday's high was a higher high. It was a higher high. You're in sort of like a channel here, and it does look bad on the higher time frames. I think if Bitcoin could get back up above $100,000, maybe people would come running back into it. I could be absolutely wrong with that, though. You definitely need to protect yourself from any massive downside move that could come. I don't think a big downside move is going to come anytime soon. Like in the next 6 months, I don't really see anything that could be recessionary. Not yet. There are a few things that are kind of, teetering around. You could look at it as recessionary, but there are other things such as GDP that are doing really good. You need 2 negative quarters of GDP before you can even say we're in a recession. Some people are saying we're in a soft recession. We're in a K-shaped economy. A K-shaped economy just means, the high productivity companies like Apple, Amazon, stuff like that are all doing good. Meanwhile, your bottom of the end companies not doing good, right? They're going down and the other companies are going up. So it looks like a K. The economy does much better when both lines are trending to the upside. But a K-shaped economy makes it feel like the markets are toppy, like they're coming to a top, but you can't fight price. You don't want to be fighting against price. That's for sure. We're seeing that. Oh, yeah, let's go look at that real quick because the dollar did get hammered. So that should have brought the Euro USD trade got stopped. So we did have a short on Euro USD. That trade did get stopped out. We shorted it back over here. The dollar's been in a multi-month range. So has Euro. And it still has a long way to go before you've resolved this range, unfortunately. It's very tight here. I know the chart is extremely messy on the monthly, but you can see the range you're trading in, and you're still in it. So until you either break out with upside continuation or break down with downside continuation, it's going to be a choppy trade. Sell range highs, buy range lows in a choppy environment. That's the best way to trade. Bitcoin is also in a range bound. You're trading inside last month's range on Bitcoin. USD Swissy though is starting to look good. As you can see here, it is starting to roll over a little bit. Still also, because of the dollar's range bound, this is also range bound. There are a couple cross pairs that are doing good. Euro Aussie here looks like it's breaking down fresh, right? You're under last month's low. That's a good sign. I don't know if entering a fresh short here would be a good idea or not in the future, but it is a level to watch. As long as you're trending under there, you might see downside continuation on Euro Aussie, and that's because Aussie's strong. You're seeing the Euro pop up now because of dollar weakness, so this might not be the best trade. Yeah, and everything versus the yen is just skyrocketing. Today, it's pulling back a little bit. So this is going to be from dollar weakness, not yen strength. Let's pull up the currency futures real quick and just see. The yen is strong today. It isn't the strongest asset, but it is strong. That's weird. Everything is literally strong except the dollar. So on the days where the yen is the strongest currency, I will be very interested to see what S&P 500 does, because if the yen is moving back to the upside, that could put downside pressure on S&P 500, the NASDAQ, the Russell, those things. But you're seeing a good up move on the S&P 500 today, even with a semi-strong yen. Let's go look at the IWM. Yeah, IWM's breaking out fresh all-time highs here today, and it looks like you're seeing that continuation move. The IWM is going to give you it's like a better signal to look at for in terms of breadth, because this is like mid caps to small cap companies. So if this is breaking out to the upside and trending higher, right? That's the key thing right there, and trending higher. Then that means the market breadth is good. It's not just AI companies propping up the S&P, and I can prove it. If you pull up the RSP, that is the Invesco S&P 500 equal weight. So all sectors are equally weighted with this product. If you look at it, you're breaking out to fresh all-time highs here. So if it was just tech keeping the S&P 500, up, then this would be range bound and choppy. Why Bitcoin sold off, not really important. But if you have to put a reason to it, you could simply say that the long-term holders were sellers because of the 4-year cycle model. So let's refresh this chart real quick. This is the long-term holder supply. Typically, when this blue line is trending up, Bitcoin prices do okay long-term. So all year since July, they've been selling. And that's why Bitcoin refused to break out. That's why Bitcoin put in that 3-drive topping formation back in October, where you got the Wyckoff distribution formation. It was literally because your long-term holders were cashing out. They were taking profits. I think if Bitcoin could have broke out back earlier, like maybe in July or August, maybe this wouldn't have been so bad. But the more time that goes by and Bitcoin is just wishy-washy, not doing anything to the upside or the downside, that just forced a lot of people's hands to take profits. And then you saw this big capitulation style drop there near the end. Notice when you got that huge drop, that's when the lows were in, or at least the lows that we put in 3 weeks ago. So if this stays going sideways to up, that might help support a bit under Bitcoin. Maybe. We also saw capitulation on the short-term holders more than ever before. So those are probably the reasons why Bitcoin is struggling to break out, or in this case, struggling to just start trending again. Sometimes it takes a while. When a bottom is being formed, sometimes it could take multiple weeks, like 5 to 7 weeks before that low is literally accepted and then prices move back towards the upside. I want to see how Bitcoin reacts above the year open. If it fails to put in any kind of bullish continuation, I will be putting on a short again. I do already hold long puts just in case it drops to protect myself, but I do want to put on a short on the future side as well to make money as Bitcoin goes down, if Bitcoin wants to roll over. So we'll see what it does here in the next week or two. Today, the majority of the trading session is over. We're 15 minutes away from the close of the stock market. So you're probably going to see a lot of sideways trading moving forward, but I'd be happy to answer any questions that any of you have, or if you have an asset that you're specifically wanting to look at, maybe you're thinking of buying it, throw it in the chat. I'll take a look at it for you. Eggs and milk, Armando down, says Wes. I buy 60 eggs at a time, $23. Yeah, the eggs are expensive, man. Everything's expensive at the store. I go to the store, I spend a couple $100 and I've got like 4 grocery bags. It's ridiculous. Been watching OKLO. Let's go look at OKLO. OKLO. It had a pretty significant pullback off the highs. Let's get the weekly 50 and just, we looked at this the other day. It's trading well up off of that. It is testing the 21. Now that you got a nice bounce here, maybe it finds support here this week. It's Wednesday. I think tomorrow and Friday will be super important because we've got the Fed. Now we just need the market to basically analyze the data, crunch the data, and then let's see what it does after. But yeah, I mean, today it is currently testing a potential support zone. That would also be kind of looked at. It's not like a perfect weekly demand candle because you have this little inside candle right here. So like if you would have gotten this trending candle to the upside right after, that would have been like what we would be looking at as a demand zone. We would want to see prices respect that. So you can see you're trading pretty good up off of that right now. Watch 96.61. If you're closing days under that price, maybe give it a minute. Maybe look to be a buyer closer to that weekly 50 if it does want to set new lows. It's a pretty significant drawdown. It was week after week after week, it was just trending lower. It could take a little while before you build in a decent support. If it trades sideways here for a couple months, that would be good. It would be better than just literally getting smoked to the downside. But yeah, we'll see what it does. It looks okay. Yeah, Andy wants to look at Wolf. Terra Wolf. It's kind of a cheapie, but it's trying to break out of the top side range. Been in a long-term range here. Then you got a couple months of expansion. The last 3 months, you've been extremely range bound. It looks like it's. I like to see these kind of monthly candles. I really don't like that it took out the low, but it could have just overshot the low based on long liquidations. So you could have had a lot of build up of longs right there and with really tight stops. So that wick under could have been because of that, right? They just overshot it a little bit. The very next week, boom, right back up. So this was just like a liquidation on that low. These are really good reactions. The fact that last week was a very small inside week range, that also looks good for upside breaks. I wouldn't be a buyer here because you're like right now in price discovery. It's trying to break out. But I would let it break out and then look to buy on pullbacks. I don't know if it's a different company than it was back here. Whatever happened to this company back then, I don't know. Long term, it's like a cup and handle formation, right? You got a long-term, very long-term bottom there, and then you're actually seeing prices start to expand upward, which is suggestive that people started buying it. That's what you need. I do not like it if it's under $5. There's a rule in the US that if the asset is trading under $5, investment banks and hedge funds can't get involved. You need investment banks and hedge fund to be involved in an asset if you are expecting long-term growth. They have to be investing. Literally have to be. If they're not, it's just a penny stock. It's OTC. Nobody but retail. So right now it's in the resistance. It could struggle here for a few weeks. I wouldn't be a buyer on it right now. I don't think I would have bought it either here. That would have been just too much downside momentum for me to get involved, but clearly they did buy that up. They bought that up with a fierceness. So maybe if you pull back into like $13, if you can hold $13 for a few days, like you get down there and then it holds, maybe you could take an opportunity there and then target the breakout. So if it fails here, pulls back into last week's low, maybe if it fails to go lower than last week's low, you could put on a little bit of risk and you could target that upside break move. But right now, you would literally be buying the weekly high. So unless it breaks out today and tomorrow and the next day, you're going to be sitting in a drawdown. I mean, drawdown sucks. Nobody likes to sit in drawdowns. All right, another one that us in the community have been looking at is the trade desk. I'm starting to like it a lot less. So essentially what I wanted to see was I wanted to see a huge bullish reaction off these lows. This stock looks like garbage. It got annihilated in 2025, and I don't know the reason why. Clearly, this is the area that we were watching to see if it could hold support. It is still holding the support, but the less that it's like, the longer it takes to break out and start putting in higher highs and higher lows makes me very nervous about holding this. If you put this trade on via options, then there's going to be an expiration associated with it. So we would really like to see this thing start to go next week, because you've already been down here for 4 weeks now. I love last week's range, and I'm okay with this week, as long as it's trading above last week's low. I've got an alert set at 38.61, but I'm still going to hold it. If it starts to break down under last week's low, then I'm getting out of it. I'm getting it because it's not doing what I want it to do. But this week looks still okay. As long as you're trading above last week's low, there is the potential there for more upside continuation next week. We might not get that move this week, but next week we might see a pretty volatile move out of here. We'll see what happens. All the analysts love this. All of them. There's only a couple analysts that say this is a sell down here. Because earlier in 2025, this thing was trading at $136 a share. So you've literally got an asset that has pulled back some 80%, 72%. Like, it's insane. And if you look at the analysts right here on this platform, out of 42 analysts, like the overwhelming majority, there's only 5 people out of 42 that thinks this is a sell. All the other people think it's a buy, or at least a hold. But you got to buy it before you can hold it. So, and because of that, I think we could see a breakout on this. Could it run those lows first before it breaks out? It's possible. It's possible. So, but this is the price at which if it starts to put lower lows in and continue, then I'm no longer holding this long. I want out of it. And you should too, if you're in it. And then I was looking at other things. O'Reilly is another one that is a potential long. It has a lot of downside volatility right now, but it is something that I am watching. If it can retest last month's low, because as of right now, you're trading under last month's open. It could hold support here. It could literally end up finding support here in the next day or two. But if it doesn't, then my next area of where I would be paying attention to it would be $90.18. This is a very good invest or a very good long-term growth asset. So it doesn't pull back very deep, or it hasn't for a lot of years. So when it pulls back, it's a good opportunity. And you're pulling back here. So I think it will be an opportunity. Under 93.98, I'll leave it alone till it gets to 90, and then I want to see what it does down there. I think down there would be a much better buy. If it starts to trend under that point, then I'm going to just leave it. Let it pull back as deep as it wants to pull back. You're nowhere near oversold or anything on it yet. I mean, you're just now getting into the 42 area. 30 is oversold. It's got a lot of work to do before it hits oversold. This company does not go, let me get rid of the deltas. This company does not go into oversold that often. So the last time it did get oversold was during the pandemic, and everything got annihilated then. So it made sense that this got annihilated then as well. So other than that, right, 17, it had a pretty extensive pullback, but that's it for all the way back, going back to 2009. Now, clearly back then, that was the GFC, so it got oversold then too. But you can see on those times, you're like 39.48, pretty good area to look to start being a buyer on it. And if it stops going down there, then I would definitely, it wouldn't really matter to me where price is, but I would love to put that together with an objective level. It would just make it a perfect buying opportunity, in my opinion. Don't really see any news, like anything that's causing huge sell-offs. We could look real fast. Let's see here. Let's see what these people have to say. 4.2% in the afternoon session after peer company AutoZone reported first quarter earnings that revealed underlying financial pressures. Okay, so if there's pressures in the automotive auto parts sector, it doesn't seem to me like a recession or anything would devastate this stock because people still got to drive to work. If they're using vehicles to get back and forth to work, then they're going to have to buy parts. Parts break on cars. They just do. I'm constantly putting stuff in my truck, so it's a good business model. So maybe I'll read up on this, see what this has to say, and then see if I can cross-reference that with other articles. I'm not going to take the word of just one company. Anything else that you... Okay, QBTS and RGTI. Let's go look at RGTI first. Rigetti. This is a quantum computing stock. They are working on quantum computing along with a lot of other companies. I have a quantum computing watch list if anybody's interested in that. Oh, sorry, down here. Here is all my quantum computing stocks. This one is, I don't know if this one got delisted, I guess. I don't know. Or if they got a new ticker, so we'll get rid of that one. But all these are your quantum computing stocks here. All of these. These are all people that are working on it. And a couple that might just get a little bit of a sympathy bid, like Microsoft, and obviously the big ones are up there, but it is what it is. Rigetti, that's what they do. That's what they're focusing on. It looks like they have formed a near-term bottom. That was like almost an absolute beautiful inverse head and shoulders there. I don't trade patterns myself, but if you were, you even got a measured move. There's your left shoulder head, right shoulder. And then this expansion right here is an absolute beautiful measured move. You're pulling back right now a little bit because you got that measured move. So anybody that was buying this based on that inverted cup and hander pattern, they probably took profits as they got the move they were looking for. So now what we'll do is we'll break it down. You're trading near the bottom edge of last month's range. That's not a great sign. First support I would want to see hold is going to be December's open. I would use December's open because you're in December, right? And then if you lose December's open, then don't even think about buying it because you're probably coming down to November's low, which is right there. So once again, you could see a little bit of an overshoot under that price as it would be a liquidation style move. You don't want to buy it if you're trending under $21 because if you break this level and you don't reject in the next day or two, then it's not a liquidation style move. It's a legit breakdown and you don't want to buy bearish pressure. So I like it. If it can hold $21, I think it would be a pretty decent buy. It's a very volatile stock, super volatility in this thing. I mean, it doesn't need to go very far to double in value. Literally. I mean, right in here is going to put you at 100% return. So completely, I'm not saying you're going to see a 100% return. I'm just saying it's extremely volatile. It moves a lot more than it looks like it does. Today, it was down almost 7%. So it's a big mover intraday. Be careful with it. Very volatile. I wouldn't put any leverage on it if I was looking to own it. All right. I would just be buying shares for like a long-term gain type of thing. And then Qubit's also going to be quantum computing. That's QBTS. D-Wave. I also have this company on there. So I don't know. I mean, this ticker looks relatively the same as the other ticker. Relatively the same as far as price structure here. Big down move in November and December's open currently holding. If it can continue to hold December's open on pullbacks, when it pulls back, if it can continue to hold that price, I wouldn't have any problems with buying it there. Once again, same thing, very volatile stock. Up in here, new fresh highs is going to give you a 100% return from down in here. A lot of volatility on it a couple weeks ago. Yeah, you could be bouncing because of that 50 test on the RSI. So a couple weeks of expansion. Let's see what it does in the next couple weeks. If it pulls back to December's open, let's watch what it does then. Long term, it looks good. I like it. Technology grows at an exponential rate. They're making huge strides when it comes to this type of technology, quantum computing. It is literally one of the things that could potentially destroy Bitcoin if they don't, build a quantum encryption that is like unbeatable. Bitcoin will suffer if they make huge breakthroughs on quantum computing. I think the last time I heard they're a good 5 to 10 years off for any usable applications, maybe even longer than that. As qubits are the problem right now. They're getting more, but that seems to be where the issue lies for this technology. But they have made good strides in that direction. I mean, they've gotten quantum computers to break codes that would take 1 billion years for regular processing to take care of. So obviously they're doing something right. And they probably have the best people in the world working on it. So I do like the investment. I think you should own some shares of quantum computing companies. I absolutely do. And it's going to be one of those things where which company is going to do best, that's going to be a toss-up. I know people love the one we just looked at, Rigetti, and I know people love this one as well. Google is the one right now that they're also hot on it. Basically, all of these companies. Let me pull it out so you can see all the tickers. That way you don't have to guess as to what it is. But there's QBTS and then Qubit as well. They also working on quantum computing. I'm not so sure about Baidu, but I'm sure they are too. Like all these companies. Good quantum computing watch list there. Maybe buy a few shares of all of them. When you get pullbacks, don't buy them today. Don't buy them today. All right, yeah, I think that's pretty much it. We missed this short, unfortunately. I was running my mouth when I should have been looking. It was right here when I wanted to put that short on. That's where I wanted to put it on. It would have literally got us in right there on that high spike. And that would have been a fantastic trade. We did make a little bit of money on Pingu, but that would have been a much better trade as it dropped 13.3%. That would have been a phenomenal trade. Absolutely phenomenal. But I'll keep my eyes open. We'll see what happens. I will be live again tomorrow morning, but it won't be a long stream. It'll be a short stream because I have to go visit my lawyer. We got some things to discuss, and I have to be at her office at noon. So we'll be live for about maybe a half hour or so tomorrow. If you want to come check us out, make sure you do. Thank you guys so much for being here. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.